Okay, so that so I will give the recording to the professor later as well. Okay, so here we are looking at the different life stages in our life cycle. So in life, we all go through this life stages, although sometimes we may not have exactly the same goals, but more or less we are about there. So for example, at the age of 25, you will buy your first car. Then at the age of 28, you'll be getting married. And then at the age of 30, you'll be buying your new first house and your children education and your retirement 55 years old. And the traveling by Bangalore, all this maybe in the part here, but all this you need money. So you may want to delay further. So whatever it is, all these are the financial decision that we need to make throughout our life. So sometimes if I were to ask you, when you got your pay, when you got your job, so which one would you buy first? Would you buy a car first or would you buy a house first? Can anybody type in the chat? If you got your pay already, okay, would you buy a car first or you buy a house first? Okay, Eliza, you are very good in financial planning. So Eliza say that house, and Muhammad Amar say it's a house as well. Okay, great. And oh, I have more answer here. And Ami, I can see Amira, you say house as well. Okay, anybody say car? And nobody say car. Okay, everybody is so clever. Yeah, because you know why? Car is depreciating. Car is depreciating. So if you can, you use your parents' car. You use your household car. You don't, or you carpool. You can carpool with your friends. Okay, so that you don't have to buy a car yourself. You save the money and then you buy a house. Because usually car, if my job is far away, so I would more convenient. Yeah. So Eliza, car, provided the car is affordable economical car, like a 20K kind of a car, whereby your monthly installment is 400 ringgit, because you cannot afford more than 400 ringgit. Okay, I'll tell you why. Because in the future, when you want to buy a house, you need to buy a house from the loan, the mortgage loan. So the bank, they will look at your monthly commitment. They will see that, okay, what is your monthly salary? And then what is your monthly commitment? Whether you have any car loan or any other loans. So then they will have to minus all the money commitment. So in all, they will make sure that your money commitment is not more than 2/3, okay, 2/3 of your money salary. 60%, it's not more than 60%. So then you'll have enough money to buy a house. Otherwise, you see that, oh, you already have a car loan, you already have a study loan. So then you cannot have money, extra room for that housing loan. Okay, so you have to, or if you want to buy a car, you buy a car maybe under your parents' name, not under your name, so that in your system, you don't have any loan. Okay, in your system, you don't have any loan. So that could be another idea. As long as you want to prove to the bank that I don't have any loan now, so I can buy this house. Okay, if you can do that. Okay, so here we are looking at during this accumulation stage. During the accumulation stage, this is where you are from 25 until 55. But of course, now we are looking at 60 years old, retirement at 60 years old. So actually from 25 to 60, you have about 35 years of working, 35 years of working, and then you retire up to not 75, I would think 85 or 95. Okay, we can live up to 95. So if you can live up to 95 minus 60, you have another 35 years of retirement. So you work for 35 years, okay? and then you retire for 35 years. Can you imagine? You work for 35 years, and then you have to provide for another 35 years. So how can we manage to manage our retirement for another 35 years? Not working, not having any work at all, and you are living on your savings. How can it be possible? So here, I'm going to introduce to you one creative way of looking at how you can accumulate your assets. Okay, so let me use my drawing pen. So we are here looking at two kinds of assets. Okay, number one, I'm looking at the properties. Number two, I'm looking at the stocks. Okay, or you can use funds, whatever, as long as it is equity. So properties. So how can we make sure that we have enough of the assets? Because when during our working years, we need to accumulate as much assets as possible, because these assets, only assets, always remember, only assets can fight inflation. Okay, I write down here. Only assets can fight inflation. Only assets can fight inflation. You put your money in the bank, no use. You put your money in the stocks, yes. You put your money in the properties, yes. You put your money in the gold, yes. As long as it is an asset. Nowadays, you can have collectibles. The collectibles involve what? Involve watches, involve NFT, cryptocurrency. All these are the new financial assets that we are looking at. How many of you have heard about NFT? Anybody? NFT. Cryptocurrency. Anybody? Yeah, that's right. Okay. Non-fungible token. Yes, correct. So actually, since last year or the 2020, from 2020, I started to see, or all of us started to see that the whole world is changed, okay, because of the cryptocurrency, because of the digital world. And what is so fascinating about the digital world? It is because people, okay, can enjoy a different kind of a lifestyle in the digital world. Okay, what do you mean? How many of you play games? How many of you play games? All kinds of games. It can be PUG game? PUBG. Yeah, PUBG. Yeah, that's right. PUBG. And then yeah, all kinds of this is what we call gaming, right? The gaming and the esports, correct? Candy Crush is the mild one, but now it's more on the GTA is more on the outdated already. So people are looking at the metaverse and then the new game and all kinds of names. I just cannot remember the names. Okay, I saw my children play the games. So these are the games, right, that are gaining popularity. The whole world have billions of people playing the games on a daily basis. So this is a huge market. So however, if you notice, when you are in the game, you are living in your own world. So you have to use your own currency, digital currency, to buy the assets that you have it in your world. So now people are looking at getting the Bitcoin and the Ethereum, especially the Ethereum, because with the Ethereum, you can buy a lot of things in the digital world. So there's one website. Okay, have you heard about OpenSea? I try to bring in as much investment idea as possible so that I can open up your horizon. OpenSea. How many of you have heard about OpenSea? Nobody. Okay, OpenSea is a marketplace, just like a stock market, a marketplace. Okay, it's a marketplace whereby you can buy and sell NFTs, all kinds of NFTs, and the NFTs can be in the form of an artwork. So these are the artwork that the artists are selling online, and they're all selling by Ethereum. Ethereum is a digital currency. In our market, the largest market cap is the Bitcoin. Bitcoin is the king of the cryptocurrency, and the Ethereum will be the queen, the king and the queen, with Bitcoin and the Ethereum. So all these artwork you can buy and sell using the Ethereum coin. So then, is it worth buying? Nobody can tell. Nobody can see whether this thing is going to be, sustainable in the future. Nobody can tell. But what we can see is that people already making money from this market. Okay, so this is what I can say. People already make a lot of money from this market. If you are an artist, you like to draw, you can convert your drawing into the NFT. Okay, anybody can do it. You just will have to watch the YouTube videos. There are a lot of YouTube videos that teach you how to create your own tokens, create your own NFT. So you follow the steps, and then you can, voila, you create your own tokens, and then you can start to sell on the OpenSea. So it's an open market. Anybody can buy and sell. So this is also a new way of making money for the young people. Why I say young people? Because older generation like me, I'm the older generation, okay? For me, I'm still very much into the technology because I love technology and I'm involved in technology. So that's why I know all these things. But a lot of the people at my generation, right, they have no idea what is this thing. No idea. So, and these people are moving into the retirement age. And their retirement age is going to be last for 30 years minimum, because we are looking at longer lifespan because of the improvement in the technology, medical field. Okay, so people can live longer. So you can see how the young people make money in the new market. I call this the new market because it's new. And they can inflate the global inflation. They can cause global inflation. Why? Because if you to look at it, these people, the younger generation, they can create money out of the thin air. So Warren Buffett says that cryptocurrency is like creating money out of the thin air. Why? Because traditionally we saw that the central banks, Bank Negara, is printing the money. Only the central bank can print the money, correct? The US Fed, only the central banks can print the US dollar. Chinese yuan, only the Chinese central bank can print the Chinese yuan. So only the government, the central banks can print money. But if you look at the cryptocurrency, who is printing this cryptocurrency? Who? Is it the central banks? No. Is it me and you? Yes. Okay. Me and you, we can create this cryptocurrency from the thin air, and the NFT from the thin air. You created something and then you make it popular. You hire some YouTuber, social influencer, and you partner with some of the movie star, Hollywood star, and you make your coins or your NFT become so popular, and everybody will bid up your price. It's like an auction market. So everybody bid, 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 and then your price is higher, and then you can make a lot of money from there. So this is the new way of how the younger generations are making money from the internet. All these are internet. You don't have a physical shop or anything. Everything is through internet. So when you are looking at retirement and the older generation, they put all their money into their fixed income, FD, bank account, savings. So, and the whole world is flooded with money supply, inflation. So how can the older generation retire with a safe of mind? Because you see, all their money is in fixed income, fixed FD, whereby the return is 1%, 2%, 3%, whereas inflation is happening at 5%, 8%, 10%. So how can you fight? Okay, so that is a big problem that I can foresee. And anyway, for what we need to do now is just to invest in the asset, because only the assets can fight inflation. It will appreciate together with inflation. So here I'm teaching you this method whereby, let's say you have looking at 300K of a property. Okay, so this property is 300K, and then you borrow money from the bank. Okay, one way to calculate the installment, a quick way, a rule of thumb is like a quick way. Okay, my shortcut way is actually to divide this into 2, become 150, and then you put a 0 there. So then this will be your installment. Okay, monthly installment 1,500. If your housing loan is 300K, so your installment will be 1,500. 300K, you can buy some nice house, okay, in some of the area, maybe a studio apartment or something. But anyway, we are looking at monthly installment of 1,500. So that means if, let's say, every month I have to pay the bank 1,500, and if I want to own this property for free, okay, if I want to own this property for free, what can I do? I will have to rent it out. Okay, I have to rent it out. So I have to rent it out at 1,500. So the rental, it will be equal to installment. Okay, so my objective is that I have to make sure that I rent out 1,500 such that I can pay my installment fully using my rental, so that after 20 years time, when I finish my loan, okay, so the mortgage loan becomes 0, because after 20 years, all the mortgage loan is 0. You will realize that who is paying for the installment? You don't have to pay a single cent. Your tenant is paying your installment. So in the end, after 20 years, you manage to own this property for free. You get what I mean? So you can replicate this for one property, and then you can replicate for second property, third property. Okay, I wouldn't advise you to have too many properties. Work beyond, you can be, work within your means. So around 3 properties is good enough for your retirement. So another way of looking at it is that once you have this first property, and then you want to buy your second property. So how? So what you can do is that you prove to the bank, okay, you use this agreement, the housing rental agreement, prove to the bank saying that I have rental income to cover my first property installment. So now I want to borrow money again for my second property. Can you borrow? Can you lend to me? Then the bank said, okay, yes. Okay, so the bank will lend it to you because you already proven that you have income to cover your installment. So they will give you the money to buy a second property. So as long as you can rent out all these properties with a rental agreement, you can continue keep buying. Okay, but up to a point. The bank, of course, they will look at your ability also. So this is how you can own your properties for free. Okay, provided you manage to rent it out and has to be a good location. Now, another way of looking at the stocks. Okay, how to own the stocks for free. Okay. So here later I will show you our recession. You see that whenever during recession, the price is low, and then after the recession, most of the blue chip stock will be double up. So for example, 2008, I bought my Maybank at 3 ringgit. Okay, so that was a 2008 financial crisis. So I bought my Maybank at 3 ringgit. So after the recession over, so the recession over, and then by 2010, 2011, Maybank become 6 ringgit. Double up. Okay, by within 1.5 years, it double up. So let's say at the 3 ringgit, you buy 5,000 shares. Okay, equal to 15,000. Okay, let's say you bought 5,000 share, 15,000. So 1.5 years later, it becomes 6 ringgit. So it will be 5,000 equal to 30K. Okay, so your investment actually double up. So what you can do is that you sell half of it. You sell half of it, and then you keep half, so that you keep the 22,005. So that means you get back your capital first. So you sell half will be 6 times 2,005 you sell. So you sell 15K, so that you get back your capital first. Okay, you get back your capital, and then the balance will be free. Okay, so that's how you can get your stock for free. So it has to be a blue chip stock, has to be a dividend stock, then it's worth for you to do this. Otherwise, when you get your stock for free, you leave it there, right? You do nothing. If it didn't give you dividends, what for? Why? Why do I want to keep it? I have to keep it because of the dividends. So every year, Maybank will give me 5% of the return dividends. So I'm happy. Every year, 5%. Anyway, I already got back my capital, so cost-free. So from here, you can see that over the years, as long as you can accumulate your assets, okay, as long as you can accumulate your assets during this age accumulation phase, you accumulate your assets, you accumulate your properties, you accumulate your stocks, and then by the time you retire, you are very happy. You don't have to rely your money in the bank, because your rental, as long as you continue to maintain your house, and then such that you, whenever, every 10 years, you will repaint your house, make it nice to rent out. You have to maintain your house. It's not like you bought once and then you leave it there. Every a few years time, you have to keep changing the furniture. You have to keep painting. You have to maintain it nice, so that 20, 30, 40 years later, the house is still in a good condition. It can still rent for good income. And it is a good form of a retirement income, because every month, beginning of the month, you will receive your rental. And that rental will be your monthly income for your retirement. Okay, for example, if you can get 2K, 3K, 4K, whatever, and that 3K, whatever, will be your money income for your retirement. How nice. You don't have to rely your money in the bank. You rely your money in for rental. Okay. Okay, so far, is it okay? So far, so good? Okay, so so here are just some of the our experience, whereby we are looking at how we can creative ways. So this is what we call creative ways of looking at investment. Okay, investment is not purely in the stock market, but invest in various kind of assets. Okay, as long as you can increase your wealth then it is investment. Okay. And sometimes people also say invest in your knowledge. That is also investment, because you invest your knowledge so that you have more knowledge, you can help you to make more money. Okay. Okay, so here we come to this part here. 3 market timing tools. So 3 market timing tools, we are looking at fundamental, technical, and market psychology. So here, maybe show of hand. Okay, how many of you know what is a fundamental analysis? Do you know what is a fundamental analysis? Okay, what are the examples inside the fundamental analysis? Maybe you can type in the chat and let me know what are some of the examples, like the financial ratio, or what are the things that you will look at when you need to use fundamental analysis. Anybody? You may type in the chat. Fundamental analysis, like how consistent the value. Yeah, the value of stocks. Okay, good. So okay, so Eliza say that it's a value, okay, of the valuation of the stocks. Okay, that's very good. So we are looking into the valuation of the stocks. Company analysis, yes, you are looking at the company book value or company valuation. Okay, company valuation. Okay. How about industry? Okay, industry analysis. So you need to look at who are your competitors, because you as a company, you do not operate on your own. You operate in an ecosystem whereby you have your competitors, you have your customers, you have your suppliers, you have the government, you have many people in the ecosystem. So you are looking at how you can compete or to make money in or strengthen your market share within your ecosystem. Okay, so that is industry analysis. And what is technical analysis? Anybody? Technical analysis? Anybody? Technical analysis, if you look at the word technical, so it will be something to do with charts. Indicators, yes. Graphs, yes. Okay, so charts, indicators. So we call it the technical indicators and charts. Okay, so later I'll go into that. And market psychology, this psychology, of course, you know, is about your investors' emotion. Okay, investors' emotions. So these 3 things are affecting our decision to make a decision in the investment decision, which stocks to buy, which stocks to avoid, and then make all kinds of investment decisions. So these are the 3 things that we are looking at, or at least I am looking at, and the fund managers are looking at, and the seasonal experienced investors are looking at. They are looking at these 3 things. Very often, new beginners, they will only look at one thing. For what I see, they will only look at the fundamental, because this is the easiest they can get. Okay, fundamental is the easiest that they can get. They do not know about charts. Okay, they have no idea what is technical analysis, and they have no experience. They can't even know what is the psychology of the market. They can't tell whether when is buying time, when is selling time. They will never know. When the new beginners looking at, wow, the stock market, oh, I want to buy. But actually the experienced investors are selling already. When the new beginners are buying, the experienced investors are selling. So who is right, who is wrong? Okay, so obviously the experienced investors, they know the market well. Okay, so we are looking at from this three perspective. Okay. So first, fundamental. So there are a lot of learning here. So I have recorded this video. So hopefully I will pass to the professor later. After we process the video, we pass to professor. And then if you have time, you can re-look at the videos again, because I will cover a lot of stuff here. And then you can re-watch the video, and then so that you can revision. Okay, so because too much of things here. So I will try to keep it simple. Here, we are looking at GDP, inflation, unemployment, interest rate. So these are the economic data. Okay, so I'm not sure how many of you are from the business economic background. Can I have a show of hand? How many of you are from business or economic background? Oh, quite a number. I see 2 hands are up. Any other from business economic background? More hands are up. Okay, great. Oh, some are from healthcare. Okay, so don't worry. If you are from healthcare, I will teach you one website. This website is very easy. Okay, this website is good. So, just now this OpenSea, I give you the link first, so that you can explore the arts there. Okay. Okay. This is the OpenSea, and then now I'm going to go to tradingeconomic.com. So this is a very useful website that I use it on a weekly basis, okay, because I need to look at the indicators and the economic data. So this website, it is called the Trading Economics website. So this is a homepage, okay? So this is the first page, the homepage, and then you can see these are all the major economic indicators. So you see that you have the GDP, interest rate, inflation rate, unemployment rate, government budget, debt to GDP, current account, and population. So these are the major economic indicators that most analysts will look at. So here we are looking at by countries. So it will be by countries, and Malaysia, you just have to click the plus here, and Malaysia is here. Malaysia. Okay, Malaysia, we are here. So if you want to compare, or you want to look at our GDP figure, the fastest way is to come to this website. This is the fastest way you can come. You come to this website, straight away you can see that, oh, our GDP year on year is 4.5, quarter on quarter is minus 3.6. So this is our GDP. And then if let's say you want to know the interest rate is 1.75. And our unemployment rate is 4.3, and our inflation rate is 3.2. Okay, and our current account deficit, debt to GDP, and all these are here. So it is very convenient. You can see at one glance how our economy is performing. So you can see that negative means no good lah, means a recession. Okay, so if you see GDP stands for what? Okay, GDP stands for GDP is equal to gross domestic product. Okay, gross domestic product, meaning that it represents the whole country's productivity, output, income. Okay, so we are looking at by country and countries, which are the countries are having some growth in their output. So if you see positive, that means it's good. Okay, the economy is recovering. If you see negative, that means it's no good. We are in recession. Okay, so obviously, some countries are doing very bad. Some countries, most of the countries are positive already. They are in green, and some of the countries are in red. Okay, New Zealand is also negative. So here we are negative. So now we are recession. Okay, so when we are recession, it means what? Okay, let me show you. Okay, so this one is our annual real GDP growth from 1970 to 2019. Okay, so for the past 50 years of our GDP, because the reason why I want to show you is I want to show you when was our last recession. Okay, when was it? So you see, yeah. When was the last recession? Here, zero, almost zero. So this was a recession year. Here, -1 recession. Here, -7.4 recession. Here, almost zero recession. Here, recession. And then 2020, we also have negative of -5.6, 2020. So we had a few rounds of a recession for the past 50 years. So that means what? That means this kind of a annual recession, right? It is a rare event. It didn't come by, it didn't come by very often. If let's say you are looking at investing for your lifetime, so how many rounds of a recession you can invest? It will be just a few times only. You won't have a lot of times. So this round is your time. I can say this round is your time to invest because we are in a recession. Okay, so let me show you. So this one is 1975. So this one is 1986, 1998, 2001, 2008, 2020. So if you to notice the gap between these two. So from here to here, it is 11 years. Here to here, 12 years. And then this one is, let's say here to here, it is 10 years. Here to here, 12 years. Okay, so we are looking at 10 to 12 years time, you will run into another recession. So when is the next recession? Anybody? Okay, anybody tell me when will be the possible major recession? These are all major recession. Huh? Yes, I would think it's about 2030 to 2032. Okay, so you can forecast. You are like a crystal ball. You have the crystal ball now. So don't tell me you want to wait until 2030 and then you invest. You invest now. You invest now, okay? But you don't have to start with much. In Busan, Malaysia, minimum share is 100 shares. So meaning that if let's say you want to buy SP Satya, this is not a stock recommendation, just for education purpose, for illustration purpose, okay? SP Satya, you know SP Satya, right? It's a developer, it's a property developer, right? SP Satya currently is 120. So if let's say you buy 100 share, it'll be 120 times 100, it'll be 120 ringgit. And if you buy through the Fund Supermart, the minimum charge is 7 ringgit or 8 ringgit, I can't remember. It could be 8 ringgit, it could be 7 ringgit. So if you buy through the Fund Supermart, it will be 8 ringgit. So if you buy 100 shares, it will be 128 ringgit for SP Satya 100 shares. Is it affordable? Yes, anybody can buy shares. Okay, so it is not like, oh, you must have a few thousand, then only you can start to buy. No, a few hundred can buy already. Okay, but you make sure you buy the good companies with good positive growth and also less debt. Okay, you don't buy a huge debt company like AirAsia, full of debt. Is now PN17. Okay, so avoid that. You go for the good one. Okay, of course the better one will be the banking stocks. Okay, the banks. For example, Maybank. Now it's 8 ringgit and 20 cents or 30 cents, I can't remember. So 820. So if you buy 100 shares, it will be 820 ringgit. Okay, 820 ringgit. So if you save here, save there, I think you can get this, you can save enough money to buy 100 share of a Maybank share. Okay, you can buy. So all you need to do is just to open the account. Okay, so you can open account online, Fund Supermart, or any of the securities firm. It's very simple. So everything is through online. You don't have to go to a stockbroking firm physically, as long as you can prove that you are 18 years old and above. I think that's all. Sometimes they will ask you for your bank statement, okay? Because now all the securities firm, right, they will link to your bank account, because if there is a dividend, for example, Maybank give a dividend, they will directly bank into your bank account. They will not give you a check. They will just directly bank into your bank account. So you have to give them your bank statement so that they want to see your exactly your bank account is under your name. That you cannot give another person's name, because no third party transaction. You cannot have the third party. Everything has to be under your name. Okay, what are the names to open account online? I see that Fund Supermart, another one, CDS. Yes, CDS account you have to open, but the CDS account you can open from your app. There's one app called app. App means a mobile app. One app called Bursa Anywhere. Okay. You go to your phone app. Okay, you go to the Play Store, the Google Play Store, and then you search for Bursa Anywhere. You see there's a Bursa Anywhere. Okay, so this Bursa Anywhere, you download this one. Okay, so then, but you must be able to tell the Bursa Anywhere where is your securities firm, because each one of us, right, we need to open two things, two accounts. One is the trading account for you to buy and sell the shares, trading account. That one is a securities firm like CIMB, Maybank, Affin Hwang, in this case, Fund Supermart. Okay, so, and Rakuten. Another one is Rakuten. Rakuten also can be done online. Okay, Fund Supermart. Okay, so this is a trading account. You open one trading account, then you open another CDS account. So this CDS account will be the Bursa Anywhere. Okay, Bursa Anywhere, and you have to tell the Bursa Anywhere whether you have account in Rakuten or you have account in Fund Supermart, because they will link. Okay, they will link. Okay, so it's very, very simple. Okay, and any questions up to here, the CDS account? So the CDS account is at the Bursa Anywhere app. Okay, S is the Bursa Anywhere. So all this online. No need to attend, go to any securities firm. Everything online. Okay. And another good thing about the Fund Supermart is that not only you can buy the stocks, Bursa Malaysia stock, you can buy unit trust, you can buy US stocks and the US ETFs. exchange traded funds you can buy from the fund supermarket. Rakuten at their website. Yes. Do you know where is the Rakuten? You can Google. You can Google rakuten.com.my. Then you can bring to their website and then you can open account online. It takes about 1 or 2 days to get the approval. Very, very fast. Okay, 1 or 2 days approved. Okay. So excited about the opening account. Can't wait to open account, right? Because you guys are at the right timing. It's a recession year. If you don't invest now, you don't wait until the market go up and then you only start to invest. Of course, you can always invest in the later stage, but it's just that the price will go higher and higher. Okay, but now from now until May, maybe April, is still considered as a low cycle. Okay, January to April is still low. So you still have these few months to invest, okay, before the market really take off. Okay, here I want to show you, this is our KLCI Index. So you can take a picture of this one, KLCI Index. So what is this, the significance? Why is it so important? The reason why I want to show you is that I want to show that the stock market actually is upward, meaning that for a long term, you can see that it is on the uptrend. You see, it is on an uptrend. Although here you can see that we are horizontal, but if you are looking at, 1980s, right, it is on an uptrend. So meaning that we are looking at still, equity market is a place to grow your wealth. Okay, we cannot be afraid by the recent stock market crash and then we feel fearful. If you feel fearful, then you will miss the opportunity. Okay, so we have to take this opportunity. So here, the 1998 financial crisis, you see, you crash until here. The 2008, from here, crash until here. So this one from here, crash until here. Here is about 1350. Okay, 1350. And then here is about 300 points, from 1,300 to 300 points. So it lost 90%, 80% of the price, lose 80%. Okay, so that was during the 1997-98 Asian financial crisis. Then 2008. So from here to here, lost about, this is 1,500, and then this is 800. So we lost about 40%, 40 to 50% here. Okay, so here, 2018, 1,900, 2020, 1,200, 1,900 to 1,200, we lost about, let's see, 120 divided by 190, we lost about 40% here. Okay, here to here, 40%. So this was the bottom already. Okay, so now we are at 1,500. We are recovering. So if you are thinking of a bottom, right, we already missed the bottom 2020. Okay, we already missed it. This was the bottom 2020. So now we are at the recovering stage here. Okay, so we are looking at recovering, and then slowly we are moving back towards the 1,900. Maybe take about 1.5 years time to reach that. 1 or 2 years time. Okay, but nevertheless, start investing now, because you have to see that whenever, even 1 year or 2 years after this recession, it is still considered low. Okay, 1 year or 2 years, it is still considered low. It is still, you still have time to get into the situation. Okay, so up to here, any question? So here actually, I want to bring you to another part. It is called the technical analysis. Okay, so just now, we know that whenever we are looking at GDP below, okay, GDP below 0, okay, here we say that GDP less than 0 or equal to 0, buy what? Blue chip stocks. And what are the blue chip stocks? Banks, consumer, and industrial. Okay, so what are the major banks? Maybank, Public Bank, CIMB Bank. Okay, so these are the major 3 banks. Consumers, we are looking at Nestle. We are looking at some of the Ajinomoto. And we are looking at some of the Nestle, Ajinomoto, and okay, automobile industry. Okay, automobile industry personally I like is because of the electric vehicles. Electric vehicles. Although now we hardly see much of the electric vehicles in Malaysia. Electric cars. We don't see much. However, in about 2 years' time, we will see a lot of people, a lot of me and you, we are probably driving electric vehicles on the road. Okay, so this is the big thing that is coming. So personally, I like the automobile industry, which is Sandabi. Okay, and B Auto. Okay, if you like Mazda, how many of you are familiar with the cars? If you look at on the road, there are a lot of Mazda on the road. That means the B Auto sales is doing very well. And yeah. So industrial, I will go for petrochemical, PChem. Gas Malaysia. Hong Leong Industry. Okay, so these are the industry, meaning that they are their customers are the industry. Okay, so that means they supply to the industry people. Whereas the consumer stocks, their customers are me and you, all the consumers. So it's called the consumer stocks. Okay, so these are some blue chip stocks whereby they have good dividends, and their dividends are like 5%. Minimum looking at 5% or maybe 4%, 4 to 5%. And which is good because the interest rate for the FD is about 1.7%. So as long as you can get a dividend yield about 3 to 5%, I think that is good enough. Okay. And utilities. Tenaga. Telecom. So these are the, the monopoly. Personally, I like the monopoly is because monopoly, they have market share, market power. Okay. So this is one timing tool. So the first market timing tool is that using the fundamental analysis by looking at the GDP figure. When GDP is negative, you can buy the blue chip stocks. Okay. So far, so good. So next, we are going into technical analysis. Okay, TA. Technical analysis. So technical analysis is about price. So this is the price. So these are the price. So this is the price in the y-axis. So this is the y-axis. And then this is the x-axis. The x-axis is about the time. You see the time, you see March, April, May, June, July, August. So this is the time, okay, 2021, 2020. So this is the time. So we are looking at 2-dimension, 2D. Price, we are looking at the stock in terms of the price and the quantity. The quantity and also the time. The quantity is the volume. So these are the volume bar. You see, high volume, low volume. So these are the volume bar. So the price and the quantity together with the time. Okay, now I introduce one thing to you. This is called moving average. So moving average is the most popular indicator, technical indicator in technical analysis. It's the most popular. If you do not know many things, RSI, whatever, you do not know, but at least you know about moving average, that is good enough. At least you can tell me the trend. Okay, in TA, technical analysis, trend is your friend. Trend is your friend, meaning that you want to know what is the trend so that you want to go along with the trend. So if it's an uptrend, you will ride along the uptrend and the price will go higher. If it's a downtrend, don't do anything. Wait for it to settle down and then wait for it to go horizontal and then wait for it to go up again. Okay, so usually the price will go through the down phase and then horizontal phase and then uptrend. So when it is down, don't do anything. You don't buy when it is keep on doing down. But however, when it is horizontal, you can start to buy when it is horizontal, because after the horizontal will be the uptrend. Okay, so how do we tell whether we are downtrend, uptrend, or whatever horizontal? So one indicator is called the 20 days moving average. So we are looking at the 20 days and 200 days. Okay, so for 20 days, okay, where can we find all this? Okay, let me show you. In the internet, there are some free chart. It's called Trading View. So this will give you some free chart. You don't have to download any software. Okay. So here we are looking at, you have to log in using your Google Gmail. Then you can read the chart. So let's say we look at the Frontcan. Frontcan is a technology company whereby it is listed in the Bursa Malaysia, Frontcan. It's a semiconductor company. So it's loading. Okay, so here will be the Frontcan. So maybe I need to zoom in a little bit. I'll go for a daily chart. So here I'm doing this. So you can see from 2020 until now, what is the situation now? Okay, you see I draw some white lines here. So these white lines will be how I calculate the support and resistance. Okay, so I'm looking at the price will go down to this level. So I'm waiting for it to come down. So I haven't bought anything yet. So just wait for it to come down. Okay, anyway, you look at this chart, and where do you call up the 20-day moving average? You go to this indicator here. Okay, you go to indicators, and then you have all these indicators, right? There are hundreds of them. So we type moving average. Okay, moving average. Here we see the moving average. So you just click. Okay, click. That's it. Then I already clicked. See, I have two moving average here. You click 2 times, then it will come up twice. So you just need to do the setting here. You see that there's the eye. This eye, you don't do anything. The next icon here, setting, and you click the setting, and then you can change to 200. You can change to 100. Then you can change to 200. Okay, so these are the common indicator, 200-day moving average. Okay, then the color, you can change the color here. You can change yellow, whatever. Okay, so here, my green lines are the 200-day. This is my green lines. Then I have the red lines. The red lines is the 20-day moving average. So what is the difference here? Okay, always remember the 200, you see 200 days means a long term. So therefore the 200 day is for long-term trend line. Okay, long-term trend line. So I write here, moving average 200 days is equal to long-term. If you are long-term investors, you will buy when the price is above the 200-day moving average. So for long-term investors, you will buy when the price is above the 200-day. Okay, so here we are looking at when did the price go below the 200-day? 2020 March. It went below. Okay, so you sell. Here you sell. Then here you buy back again. Okay, you buy back and then it go all the way up. Here you sell again. Okay, when do you buy back? You buy back when it crossed the green line again. Then it will go up again. So as long as you are long-term investors, you will buy according to this green line, which is the 200-day moving average. Okay, you are the long-term investors. However, if let's say, okay, I don't want to hold for too long. I want to be a short-term investors. I want to trade short-term. I want to buy and sell, make money, okay, make profit. Yes, you can. So you can use this 20-day moving average for short-term. You buy when price is above the 20-day MA. So here you see that when the price above it, you buy. Below, sell. Above, buy. So here, the red line, is it below or above? Below. You don't do anything. Actually, you have to sell here. Because when it crosses below the red line, you sell here. So when it crosses up the red line again, then only you buy back. So now you don't do anything. Easy or not, this moving average? This line, is it easy? Do you how many of you understand this part so far? Okay or not, this part? When the price below the red line, you sell. When the price above, cross above it, the price, this is the price. When it cross above it, then it buy. Okay, so you see when it cross below, you sell. When it cross above it, it buy. And then here you sell again. Okay. However, something, okay. However, what you need to do is you need to draw a trend line. So as long as you are looking at a trend line, you have to confirm. So here I'm teaching you how to draw a trend line. So you go to this line, you click the first one, then you can start to draw trend line. So you can draw a trend line like this. You can draw a trend line like this. Okay, so this is the trend line. Okay, so this is a trend line. So when it breaks the trend line, sell also. Okay, another thing, you can also draw this downtrend line. Okay, you can draw this downtrend line. So you have to wait until the price go. This one is going day by day. So Monday, it will be like here, Tuesday, Wednesday, Thursday. One day, it will meet this line, and then it will break out. So this is what we call a breakout. You see, a breakout. So whenever there's a breakout, that's the time to buy also. You get what I mean? So for example, you see, breakout, buy. Then you make money here. Breakout, buy. You make money here. And breakout, buy, you make money. Okay. So whenever you see the price breakout, then you buy. When do you sell? You draw a line here. You sell when it is breaking down. Okay, when it crosses below, you sell. Okay, you sell here and then you buy back again here. And you'll be looking at this kind of a line. Here you sell, here you buy. Here you sell. After you sell, when do you buy? You wait. Monday, Tuesday, Wednesday, Thursday, Friday, maybe following Monday, until it hit this line, break up, then you buy. Okay, so this is technical analysis. It is nothing to do with fundamental. It is purely looking at the chart reading. So meaning that I don't have to know about what this front can is doing. I don't have to know. I don't have to know whether this company is making money, whether it is making losses, whether this management is good, whether this industry is good, whether this industry is producing something. I don't have to know anything. What I need to know is the price. I just need to know whether it breaks the trend line, whether it's a breakout, whether it's time to buy, whether it's a time to sell. By looking at the chart, you see, I just draw this few trend line, then I can tell when to buy, when to sell. So that's why there are two groups of people in the market. One group of people are the pure fundamentalists. They focus on the fundamental. So they do not look at the technical. So they are for the long term. Okay, so those are the fundamental group for long term. And another group of people, they are meant for the short term. So they only want to go for short-term profit. So here we are looking at, maybe you buy here and you sell here. So maybe you hold for about 3 months. Okay, the most is about 3 to 4 months. Then you sell. And then you buy again, and then you hold for another maybe 4 to 5 months. So it's more like a medium term, not entirely short term, but more like a medium term. Okay, some people, they like to do this. So it depends on your personality. Each of the investors, we have our own personality. Some people, they like to go for long term. Some people, they like to go for medium term. Some people, they like to go for short term. There is no right or wrong. Okay, I can't say that, oh, short term is bad. No, no good. I can't say like that. What I can say is that you just invest according to your personality, according to your preference. Okay, so no right or wrong. As long as it makes you comfortable in investing. The minute you find that investing is stressful, something is wrong. You are not suitable for that investment because it makes you stressful. You get what I mean? So investing has to be comfortable to you. Okay. Up to this part here about the technical analysis. Okay, how about BT Okay, Muhammad Amar, BT what? My eyes cannot see. BTST, is it? Okay, is that a stock code? Okay, let me check. BTST. There's no, did I, BTST. What is BTST? Maybe you can type in the chat and let me know what is BTST. Okay, so you can type in the chat and let me know. So any other stock that you want me to see so that I can show you? Any stock that you want me to see or not? I can show you the technical. And then I can tell you straight away whether next week it will be going up or down through the technical analysis. I don't have to know about the fundamental. I just look at the chart and then I can tell you whether it is up or down. Okay, double Haji is a share, it's a unit trust. I don't think this one is in the trading view. Unit trust, usually I don't use technical analysis on the unit trust is because it is already a fund. Okay, it's a diversified. So that's why, but I can see that it could be, let me see if I can see double Haji. No, it's not here. Yeah, it's not here. Is it this one? This one is Indonesia Stock Exchange. No. So this, yeah, so here tradingview.com is, it doesn't have all the funds. And some of the stocks, not 100%, all the Bursa stocks are here, but the major ones are here. So individual stocks are here, okay? What other stocks? Individual stocks. Have to be individual stocks. Any other stocks? Wish to know how is business affected by pandemic? Okay, good. Just now, we have seen that our GDP, if you notice, among the regional countries, right, most of the countries, they have a positive GDP already. So that means their economies are recovering, except Malaysia. Malaysia, we still have a negative, it's still in red. So that means that our economy is very much affected by our pandemic. Okay, it's very much affected. So another indicator that I can show you is the unemployment rate. Okay, so just now we saw that the unemployment rate, you see okay, this one is the unemployment rate. Okay, so I scroll down to the Malaysia. Okay, you see Malaysia unemployment is 4.3%. So we click here. You click here, you see our unemployment rate. Okay, so this unemployment rate, although you see that, oh wow, our unemployment rate is declining, so it's good. Okay, let me show you the maximum. You see, although it is declining, we are still high. We are still very high here. So that means there are still a lot of people in Malaysia unemployed. So this is a true fact now. And if you look at our historical unemployment rate, for the past 20 years, right, we hardly go above 4% unemployment rate. We hardly go above 4%. Not even the financial crisis in 2008, just 4%, then it come down. Okay, so this round, this pandemic, it hit above the 5% and then consistently at above 4.3% for 2 years, 2020 until 2022. So for about 2 years. So this I think is explain how severe it is affecting our economy. And if you look at the 1998, even in 1998, it was a flash kind of a pop up to 4.5%. 1998 Asian financial crisis. It was a very severe kind of a recession. It's called Asian financial recession. But even that, right, it was 4.5 only. And then it was only 1 or 2 months and then it come down. But this round, I think it is severe. This reminds me of the 1980s recession. Okay, 1980s, I was still a child. Okay, at that time, I was still a child. And many of you haven't born yet. So I remember clearly during that time in the 1980s, right, the recession lasted for years. It's not like 1 year, it was years. So now we are looking at 2 years already. So now this year will be the 3rd year. So we are looking at quite a severe recession. But in order to see whether we are recovering, we have to monitor this GDP. And the minute we see that we are in green already, so we should be on the way recovery. Okay, so now currently we are still recession. And this recession is one of our worst in our history. Okay, I can say that it's one of the worst because it is worse than the 1998 and it's worse than the 2008 financial crisis. So it's more like a 1980s kind of a recession. Okay, so what can we do? Okay, for the final year student, if let's say you are on the final year student, do not worry because we are coming out from the recession. We are trying to recover. So what you need to do for the final year, the best, if you can, try to get internship. Okay, try to get internship in a large organization if you can get, especially if your results is very good, if your GPA is very, very good. If your GPA is very good, and then your what you call CCA, or you're very active in your university. That means you join this club, you join that club, you are the speaker, you have a lot of activities. Okay, so if you are that type of a student, you have to go for internship in the large corporation. You have to go for it because in your future job market, okay, in your future, whether you can get into large corporation depends on what you do in your university and also what was your internship company. Okay, if you can join large corporation during your internship, most likely, okay, about 80% to 90%, your future job will be large corporation as well. It will be together. Okay, so if let's say you join smaller SME companies, chances are you'll be ended up in a smaller SME companies as well. So that is why the internship, you have to be very, very selective. If your criteria is very good, if your results is very good, your grades are good, you can go for the best one. Okay, yeah. So then that's looking for the job market. Okay. So come back to here. So if let's say you are looking at individual stock like Maybank, and so you just type Maybank and then it will come out and then you click. Okay, so you see that, oh wow, all the lines, what are these lines? So don't worry, you look at the green lines. Where is my green line? See, my price is above my green lines. So meaning that if you are for long-term investment, now it's good to go in because you are still above the green lines. Okay, so it's for long-term investment. And for short-term investment, you are still below the red lines, so may not go in first. Okay, wait until it break above the red line, then only you go in. So then this is looking at when to buy, when to sell. Okay, it's looking at the timing of the buying and selling. Okay, by looking at the technical analysis, the timing, by looking at whether it is above the indicator, you buy, below the indicator, you sell. Okay. Okay. So technical analysis. Okay. So this is the second timing tool, whereby you are looking at when to buy and when to sell by looking at the 20-day or the 200-day moving average. Above it, buy. Below them, sell. Okay. Okay. Then we will move on to psychology. Market psychology. Psychology is something that always, it's like a mystery. Sometimes we are happy without ourselves realizing it. Sometimes we are sad and moody without ourselves realizing it. So in a situation, in my experience, sometimes when you invest or when you trade, you will have all kinds of emotion come to you. For example, okay, you bought into a share or stock, okay, and then you buy low and then you want to sell high. So then the price sell high and you didn't do anything. Then when the price go down and then negative, you are worried already and then you want to sell. So when the price, you saw your price went up from 1 ringgit to 2 ringgit, you didn't sell. And then from 2 ringgit down to 1 ringgit, then you are worried that it will go below negative. So you wanted to sell. So let's say it went down to 90 cents and then you are so scared, you are so fearful. And I say, okay, oh no, I'm going to lose money, so I better sell. So you sell at 90 cents. So you lose 10 cents. Okay, say for example, you lose 10 cents. So then after you have sold, immediately you saw the price went up all the way to 120, 150 to back to 2 ringgit. Then you feel very, very angry. Okay, so that's the emotion that involved when you are investing. So here we are looking at this kind of a situation whereby when you are into the trading or investing world, you will get carried away by the emotion, your own emotion, as well as the environment sentiments. Okay, so this is what we call sentiments. Sentiments of the market. So the sentiments of the market, we call it bullish, means good. Bearish means negative. So sometimes you see, oh, this is a bullish sentiment, or this is a bearish sentiment. So bullish is good, bearish is negative. So, but the thing is that we cannot control our emotions. So when we are in a good bullish sentiment, we tend to buy. We buy. When the price is higher and higher, you just keep buying because you feel good. It's very bullish. However, when it is going down, you feel bearish, you feel negative, you feel very fearful, you feel very upset, and the negative sentiment is surrounding you. The market is everybody is so negative. The price keeps dropping and many people keep selling. So in the end, what happened? In the end, you buy when the price go up and then you sell when the price go down. So can you make money? You can't make money. You can't make money when you buy at a high price and then you sell at a low price. So that's why we have to study the psychology of the market so that we can behave differently from the market. Okay, so for example, over the years, I studied that we have low cycle and a high cycle. Okay, I studied that we have a low cycle and a high cycle. So low cycle happen every month. High cycle also happen every month. So it's repeat every month, month after month. And occasionally, not all the months are like that. Sometimes you may miss, but most of the months are like that, happening again and again. So this is what we call cycle. So the low cycle is fourth week and the first week of the month. So if you to ask me now, February 5th, is it good time to buy? Okay, how many of you think February 5th is a good time to buy? Tomorrow, Monday will be February 7th. How many of you think February 7th is a good time to buy? Anybody? February 7th, is it good time to buy? You will not know, right? Because you are new in the market, you have no idea what is the sentiment of the market. But I can tell you, this week is a good week to buy. This week and also next week is a good week because it will be the first week of the month. So this first week of the month, the last week will be the 25th until the 8th of the month. Okay, so this will be the good week to buy because it is low. And after the 8, 10, 11, 12, you can see that the price started to go up. Okay, it will go up until it will go up to the third week, will be the top. And that will be around 18 to 21st of the month. So sometimes it will happen, sometimes it will not happen, but most of the months it will happen like that. So, but however, I can tell you most of us, you will buy on the third week of the month. Why? Because you feel happy. You feel positive. You feel bullish. And this is very natural. Very, very natural. This is human psychology. All of us feel happy, bullish, then only we want to invest. You will never invest when you feel fearful. Okay, so this is human psychology. So we want to break it. We want to break this chain. Because if you forever doing like this, you will forever not making money. Okay, so you have to break this chain. So then you have to invest when people are feeling sad, fearful. So Warren Buffett says something. Warren Buffett says, be fearful when others are greedy, and to be greedy when others are fearful. So that's Warren Buffett. So this is exactly. So when people are fearful, you invest. When people are greedy, you sell. Okay, so this is the market psychology when it comes to the month-to-month trading. If let's say you are looking at month-to-month trading or when to buy every month, if let's say you want to invest on a monthly basis, the best investment will be the first week of the month. You invest whenever you are looking at the first week of the month, you just buy some blue chip stocks. Okay, you just buy. So this month is February. So then come to the March. So March also, you wait until the first week of the month, then you buy something. And then the April, okay, and then the May. So first week of the month, you buy something, okay? So you see, you can do this as an experiment. And then you see whether it works for you or not, okay? You can try it as an experiment. Okay. So up to here, okay or not? Okay, so there we have it. the 3 market timing tools from the 3 perspectives. Look at the GDP. When GDP is negative, buy. Because when negative means recession, we buy. Although the companies are still not making money, but we are recovering. So we are looking at the past historical, our Bursa Malaysia, our GDP. You see that the stock market usually go down to a low level during recession, and then it will recover when it recovers, the economy recovers. Okay, so the companies will be like that too. So now they are not making money, but then when the market recover, they should be looking at more job opportunities as well as company making profits. Then the share price will go up. Okay, so that is number 1. Second timing tool, you look at the 20-day and the 200-day moving average. If the price above them, you buy. If the price below them, you sell. So that one is on the buy and sell. Then the third timing tools will be looking at the market psychology. So when people are negative, you should be buying. When people are very positive, you should be taking profit. Okay, so it's more on the opposite of what the mainstream people are thinking. So you're thinking on the opposite way. So now everybody is fearful, everybody is negative. So isn't it now is the best time to buy? Okay. Okay. So here I'm showing you some of the charts here whereby you can see the green lines are very clear, the 200-day moving average. So once it breaks above the 200-day moving average, it is going up. Okay, so here you buy, and then you are riding on the uptrend. And SP Satya, also you buy here, and then you are riding on the uptrend. As long as it is above the 200-day moving average, it's fine, okay, because you are long-term investors. So you just have to believe in this company is good. SP Satya, okay. Then you look at the chart, it's breakout, and then it's above the 200-day, so you buy. Okay, so number 1, you look at the fundamental of the company, whether this company is good or not. Number 2, then only you use the technical indicator to tell you when to buy. So then using the fundamental, you can identify a few other good stocks like Maybank, CIMB, and blue chip stocks, PCAM, Gas Malaysia, all this, okay, Tenaga, all these good company stocks. And then you see whether it is above the green lines or not. So these are all very hands-on chart reading skill, whereby you can apply immediately. Okay, so if you cannot remember, you watch back this video again, and then so that you can remember. Okay, I want to share with you our students' feedback, because for me, I also have some stock analysis course, so you can see how our student like our course as well. Okay, I want to bring in my student who wants to give some sharing, okay, about what they have learned from my courses. Okay.
I think this is the most intensive courses I have attended. It's like 2 hours per day and 3 days per week, and for 2 months I think it's like so many hours. So I think the money I pay is so worth it. Other courses is like maybe 4 days workshop, and then bye-bye already. Overall, still make money lah. So I think July make money, August make money, September lose money, October is a little bit like break even, then November is so far is a little bit lor. So I'm trying like a few methods.
Hello everyone. So my name is Eugene. Thanks to her, like these few years, I managed to get quite a lot of gains from the stock market actually, to be honest. I always ask her about the advice on how do you invest. which stock to choose, and last but not least is all about what is your investment behavior type. So thanks to her, yes, once again I managed to get quite a lot of profits. So
Okay, our next student is Noah.
Hello everyone, I'm Noah Tay. After learning, I found out that I'm more on the short-term trading on stocks and also the futures. So the technical analysis class really helped me a lot in identifying the suitable time to enter and exit the market and different strategy to find out the trading opportunities. So if you have any question on stocks, futures, or any financial planning, you can always feel free to ask Miss Pauline, because after I graduate, I also asked her, and then she's very kind to help. And I really recommend her class because she not only teach on stocks, futures, including of technical fundamental analysis, and she teach this class is a holistic way of investment. Okay, thank you.
I'm Miss Howe. After attending the class, I found Pauline is a very patient and motivating teacher. She's very encouraging and trying her best to ensure her students understand what is being taught and motivate them to participate in the practicals. For those who are lacking in knowledge of TA, I would strongly recommend who are interested in taking up the course.
Yes, so you can see that if you learn about technical analysis, right, you can actually predict what is happening. So this is February 3rd, just a few days ago. So in my message to my student, I say that the market will open at 15. There's a support at 1512, and then it will go all the way to 1525. Okay, so this is what I showed them in the message here. I was wondering if I can enlarge it. I can't enlarge it. Okay, let me see if I can enlarge it. So I say that support at 1512, and then it will be trading at 1510 to 1525. So in the end, it went up to 1525. Okay, so I can tell before the day, the market, I can tell when the price will go up, because all this can be done through technical analysis. So that's why if you have the skill, you can really see what is the market heading into. You can predict the market. And then sometimes I can also tell when is the bottom. For example, for the US stocks, I say that, oh, mid of October, okay, mid of October, it is the bottom. So then after that, then the price will go up. So then people will buy at the mid of October, and then they can make money. You see, they can make money. So they will buy Facebook, Nike, Marvel, Apple, Unity Software, Microsoft, Nvidia, all this technology stock. And here, also, I would like to introduce my books to you guys. If you would like to know more about the stock investing, I do have books selling into on my website here. Okay, I give you the link so that if you, let's say, you want to purchase the books, you can purchase on online. Okay, let me share my link. So this is my website. It's called alphaacademy.biz, and give you this link. And there are 6 titles on the books that you can purchase online. Here you just have to click Pauline Yong's books. Then you can come to my page, and each of the book is 33 ringgit and 80 cents. It's inclusive of the shipping. Okay, it's inclusive of the shipping. And then for this I Love Stock, I will free a CD-ROM. Okay, this CD-ROM is a financial planning CD-ROM whereby it will keep track of your monthly budget. Okay, so this one is you just click the buy now button, and then you will link to your payment gateway. So I also have this book. It's called I Love Trading. It's about trading. And this book is about psychology, rational investing. So this book is about psychology. And this book is about financial planning. Okay, so all these books are 33 ringgit and 80 cents. And this book is Chinese book. And this book is published in Singapore. So it will not be sold in Malaysia. So you just, if you click buy now, it will link you to the Amazon or the eBay. So it will be sold in the US dollar. Okay. So, but at the moment, these are the books that are published in Malaysia. Okay. And you can purchase online here. And if you are interested in the lesson, I also have the video lesson. So the video lessons, meaning that, okay, I'll give you this website as well. So if you are interested, you can also look at my video lesson, and you can purchase the video lessons online as well. So for example, I have the fundamental analysis, whereby this whole videos, it's equivalent to about 2 days kind of a video lesson. And it's on economic data, fundamental analysis, financial statement, financial ratio analysis. I'll teach you how to read the financial statement, how to analyze the financial ratio, and how to analyze the industry. And also talk about what are the psychology of investing. And this one, what are the steps in making your investment decisions. So this whole thing will be inside the video lesson. Okay, so this video lesson is 388. Okay, it's 388 for fundamental analysis, if you are interested. Okay, then I also have technical analysis, so you can click fundamental and technical. So for the technical analysis, it will be equivalent to about 4 days of a lecture or the lessons. Okay, and it's everything about chart reading. So you can see some of the contents, they are very, very in-depth. That means that what you see here in my course, you can't find in any other people, because other people, they will teach you only the candlestick, or they will teach you only the small little thing. They will not teach you the whole thing about technical analysis. For me, I like to teach the whole thing about the technical analysis, including the theory part, including the practical part. Okay, so a lot of people, they neglected the theory part. They don't teach the theory because they just teach the strategies, but that is not enough, because a lot of time the investing environment keep changing. We all keep changing. It's evolving, it's evolving. So it's keep changing. So you need to have the understand the technical analysis well enough so that you can keep changing your strategy to adapt to the environment. So you have to go through the technical part. So here you can look at the course syllabus. So I have lesson 1 to lesson 11, lesson 10, lesson 1 to lesson 10, whereby you will have lesson 1, you will see that these are the things: introduction, what is a technical analysis, and then the application of TA, technical analysis terms, charting software, and quiz. Okay, so there's a quiz as well. And then for lesson 2, I'll teach you how to draw the trend line and exercise to draw the trend line and channel line, support and resistance, and things like that. And then lesson 3 is about Dow theory, and then chart pattern, technical indicators, Bollinger Band, or this RSI stochastic, candlestick, price volume analysis, Fibonacci analysis, Elliott wave theory. A lot of people, they don't teach you Elliott wave, but for me, I teach Elliott wave. It's part of the technical analysis, and money management. And you can get a free copy of an ebook on behavioral investing, understanding the psychology of investing. Okay, so this one is 588 for this whole course. Okay, the whole course of technical analysis is 588. So it's very simple. You can just purchase from the link here. Okay, you click here and then you can purchase. So, okay, let me go back. Okay, so these are my books and my CD-ROM. So if you buy those books, you can get free copies of this CD-ROM and also the financial planner. So I will give you these two as a free gift inside the book. And here are my video lessons that you can purchase online as well. So these are the video lessons. You can see that this is the technical analysis. This is a fundamental analysis with 6 lessons, and technical analysis is 10 lessons. Okay. And if you like to know more about our course, actually, we also collaborate with SEGI College Subang Jaya, whereby we offer executive degree program for financial management class. So meaning that if you want to know more, you can find out more from our website as well, because all our courses here are collaboration with SEGI College. So there are 6 modules here, whereby you attend all the 6 modules, and then you can get the certificate awarded by SEGI College. So today, for all the participants, you can get the certificate of participation. So all you need to do is to give us your full name. Okay, I give you the Google form to fill in. You have to give me your full name so that we can send you, and your email address so that we can send you the certificate of participation. Okay, so this one is actually from Alpha Academy. So it will mention your full name here, and then the course that you have attended. And this course is our how to get started course. Okay, and it will be signed by me. Okay, so if you want to get this certificate of completion, please register your full name and your email address so that we can send to you, okay, by clicking this link. Okay. Okay, and today there's a free gift as well. And this free gift is called investment policy statement. So what is investment policy statement? It is actually like an investment plan. So you just have to scan this QR code. Okay, you scan this QR code, and then it will link you to a Google document. And this Google document will be giving you what is your financial goal, and then how to, what is your buy strategy, what is your sell strategy. It's like a plan for you. So before you buy any stocks or invest anything, you have to write in this plan first. It's like a plan, okay? Okay, to open a CDS must be with stockbroking company? No, not necessarily. So for opening a CDS account, you have to actually just now for the Fund Supermart. Okay, I bring you to the Fund Supermart. Okay, just now the Fund Supermart here. Okay. You see, this Fund Supermart, right? You open an account, okay? Then this is a trading account. Then if let's say you want to open a CDS account, to open a CDS account. So this CDS account, you have to link to the Fund Supermart or the stockbroking firm. Let me see. Yeah, I think the CDS you have to link to a stockbroking firm. Yeah, that's right. Because if let's say if it's a Fund Supermart or Rakuten, right, it will not be linked to your CDS account. Yeah, you're right. Yeah, Professor Dr. Jun, you are right. For CDS account, you have to open with a stockbroking company like Affin Hwang or Maybank or yeah, CGS, CIMB, CGS, MBB. You have the Fin Huang, all this. Okay. Yeah. But however, if let's say you already have it, then that will be good. So all you need, because sometimes a lot of people, they open a lot of trading account everywhere. They open one in Maybank, they open one in Fin Huang, they open one in CIMB. They have a lot of trading accounts. So they have a lot of CDS account. So their CDS account is everywhere as well. So then this Bursa Market, Bursa Anywhere is an app whereby they consolidate all the CDS account into one app. So once you register the Bursa Anywhere app, they will, according to your IC number, they will consolidate all the CDS account into one app so that you can transfer your shares from one CDS account into another CDS account, but it's under your name. Okay, you can do that under the Bursa Anywhere app. Okay, so that is for people who have a lot of accounts. Then you can consolidate using the Bursa Anywhere, and then you can transfer here and there. And each transfer is 10 ringgit only. Yeah, you can do that. Okay, yes. However, if let's say you are opening account with the Fund Supermart, right? Then you are actually looking at the trustee. You are actually holding a trustee account. So that means it will not link directly to the CDS account. It will be a trustee account. So that's the difference. Yeah. Okay, thanks. Okay, any other questions? Yep. Okay. So please remember to fill in your registration form so that we can send in the certificate of participation to you. Okay. So I hope that today you have learned something, and hopefully all of us will have a better understanding about investing, okay, and about financial planning. The most important is the attitude towards investing. It has to be linked to financial planning. It's an overall, it's a whole holistic way of managing your money. It's not purely just want to make money from the stock market. So simple. It is about the whole financial planning process. Okay. Okay. Thank you so much for everybody. Thank you, Professor. Thank you. And thank you, students. And the recording, I will ask Frankie to email to Professor. Okay. Okay, great. All right. Thank you so much. And hope that you guys learn something today, and you can apply it right away. Okay, thank you. Okay, bye-bye.